Hello and welcome to my channel, The Day Tradester. This is a channel where I show you how I day trade and, more importantly, swing trade my long-term investments. And why do I do that, you ask? I record every trade that I make, so I might be inspirational to those of you who are not in the market, who are thinking about getting into the market, either with a cash account or some sort of retirement account, and also those of you who are trading, but you are not profitable because you're trying to day trade, and you're finding it difficult to make money through day trading, but I do not join you in losses. I've basically been profitable since I started 3 years ago. On October 19th was my first trade in 2022. And I want to show you that you absolutely can be profitable with a very simple and safe strategy. And the best place to buy stocks is in the S&P 500. This is a 3-month chart with the candle aggregating on a daily basis of the S&P 500. We're going to zoom in here and we can see that today we gapped down from yesterday's close. We gapped down roughly $13, but we have slowly crawled our way back up and up and up, all the way back up to where we are just about to bounce or touch off of the fast moving average. So we're meeting a little bit of resistance here. You can see where we went up, we just barely crossed the line, and prices moved back down. Let's zoom in even closer. You can see price is a little bit lower after barely crossing the fast moving average, so that is acting as resistance. If you're seeing my video for the first time, this candle is from Friday's news release from Donald Trump, saying that he is going to have 100% tariffs on China in retaliation to China, saying that they are going to restrict their rare earth metals exports. But it looks like that the bulls are winning here. We did not hit resistance and bounce back down and start the trend downward, which frequently happens. But we are pushing up. The bulls are pushing up, and hopefully it will just go through the fast moving average and make its way on up higher for the rest of the day. Okay, we've got some stocks that we received some possible sell alerts on. So we'll take a look at the first one, which is Hewlett Packard, HPE. I'll zoom in, but well, I don't really need to zoom in. I mean, you can see what's happened. HPE gapped down severely yesterday. And that is off of some news where they had a meeting and the CEO made them aware of the headwinds that they're going to be facing as they adjust their manufacturing to accommodate the growth in AI. And as an example of investors do not like headwinds. Investors don't like trouble. They like the companies that they're invested in just to keep moving along, selling products and making money. But if you don't keep up with the changing times, you more than likely will not succeed. So they are making a small adjustment to their manufacturing and their processes and their products that will be available to consumers. Now you can see I recently maxed out on my books, and each book has seven shares. So I bought all 28 shares, maxing out my full books at the continuation candle of price moving above the slow moving average at this particular cross. However, it's gone. The price has moved against us. We have price of the fast moving average cross below the slow moving average, and then we have a continuation of that price today. We are still down. We're significantly down. I currently have a sell order for 7, so I'm going to place a sell order for the remaining 21 shares of HPE. So I need to come into my all accounts positions, and we're looking for HPE. We're going to right click in our watch list. There's sell, and we are selling 21. We're placing a sell order for 21 shares, and I bought my HPE at $26.09. So we come to our first place digit. We take 10% of the 20s, and that's going to be 2 cents. And I will add 2 cents to my purchase price, making that $26.11. That makes my sell order $26.11. Good till cancel extended hours and confirm and send. So that did not go through. I must have done something wrong. Here we go. Try this again. We're looking to sell 21 at $26.11. 26.11. There's 26 and 11. We've got good till cancel. Confirm and send. And there we go. It went through that time. I don't know what happened on the last sell order. All right, now we're going to take a look at Datadog. D-D-O-G. Datadog, as far as I know, is a software company that provides software for cloud-based systems so they can observe and watch and create usable analytics that can make improvements for cloud-based servers. So Datadog price is currently lower than our purchase price of we'll just say 162. We had price move below our fast-moving average yesterday. Fell pretty drastically. However, we have a green candle and it is climbing back up. Now, more often than not, in both S&P 500 and a lot of stocks, more often than not, when we have a big drop in the day, usually the next day is a green candle day. Doesn't necessarily mean it's going to continue green, but statistically what I found through the stocks that I own, this is a pretty common occurrence. I mean, here wasn't that near as big as this drop, but here we have a drop, green candle, drop, green candle. Not the same here, drop, green candle. Now, these are just regular price action and price movements, but this is a pretty big drop down. If we expand this back out, you can see there's very few. There's only one other candle bigger than that one, and that ended up being a longer term trend down, but it was already this gapped up due to earnings. It closed down here around 133, and then the next morning it gapped up, opened up at 147, and then it just dropped down the rest of the day. So it was already, looking at the fast moving average, we were already in a downward trend. So zooming back in here. So because we do not have a true continuation, I will not be placing any type of sell order on the shares that I have. Moving on to Robinhood, HOOD. Okay, what do we have? Okay, so 2 days ago, we had price move below and close below the slow moving average. We had a continuation candle yesterday. For whatever reason, I missed that, and we clearly have another continuation candle today. So we are going to look to sell because of this cross. That is a trigger, and we received the sell alert this morning. And I bought 3 shares at 115 and 3 shares at 109. So I will be selling 3 shares at a small profit. We sold those at 128.68 and I bought at 115. We're just going to round those up to 169. So that's $14 a share. That's $42 in profit on that sell. Interactive Brokers, IBKR. Now, Interactive Brokers, what do we have? Let's take a look. So yesterday we sold a book based on this continuation candle of this cross. We now have a cross of the price going below our slow moving average. And that in and of itself is not a sell signal. We want to wait until tomorrow to see if we get a continuation candle. You can see I've already purchased 20 shares today and I've sold 16 in my day trading strategy. The last book I purchased, which was at 4 shares, price changed direction on me before I could sell it. So now it's sitting here in a sell order. My day trading strategy is the same strategy that I implement on my swing trading strategy. However, it's on a much shorter time frame. These candles aggregate on the day. This is called a daily chart, and the candles that I use to day trade are on the 2-minute chart, meaning that those candles aggregate every 2 minutes. So we'll leave IBKR on our list, and we'll take a look at that tomorrow. We're now moving on to Intel, INTC, Intel Computers. We do not have anything going on. We did have price move yesterday and close below the fast moving average. Thus, we received a possible sell alert this morning, but price has changed direction. So we're going to pass on Intel and we'll take a look at that tomorrow. Palo Alto, PANW is the ticker. And what do we have? 2 days ago, we had the candle cross and closed below our slow moving average. Yesterday, I sold 2 shares based on that cross because we had a continuation candle today. or excuse me, yesterday. And as you can see, I have also been day trading Palo Alto, making a little bit of money on that today. Now I'm looking at this candle, even though this trigger occurred 2 days ago and we made the sale yesterday, I actually added to my position and bought one extra book. So when I reach the point of where I have made a sale based on price moving and continuing beyond the fast moving average and price moving and continuing past the slow moving average, I should have 2 books. And then my sell trigger to sell those 2 books is when we have a continuation candle after the fast moving average crosses the slow moving average. Because many times, as a trader, you'll see that price can quickly fall down beyond both averages and then return and move back up before the fast moving average actually ever crosses. But since I have one extra book, I should be down to 2 books. Each book has 2 shares. Since I added to my position back here, thinking that with Palo Alto and AI, that cybersecurity was going to take off, and ultimately it will over the next several years, more than likely. But because I have one extra book, I'll be looking every day to see if price falls down below this candle close. And if it does, I will be selling Palo Alto at that point. So maybe we'll be selling some QQQ. QQQ, the triple Qs, is an ETF to the NASDAQ. So yesterday we had price move down below both our fast moving average and our slow moving average, but we do not have a continuation. We did on the open. If I was trying to sell my shares at the open, then I would have been selling them here. We would have made a tiny little profit, but price has changed direction and it's moving up on us today. So now we're going to move on over to Snowflake, SNOW. Now with Snow, I'm currently maxed out with my 4 books. That's 1 share for each book. We had price cross the fast moving average. The next day, we did have price stay down below the slow move before, that's a fast moving average. Price moved down below the fast moving average. The next day, we had price stay down. However, I did not make a sell because apparently when I was making the video, price was higher than the candle close. But now we had a gap up and then prices moved down yesterday. But this trade here for 2 shares, this was my day trading activity. But we clearly have a continuation in price of all 3 of these closing down below the fast moving average. So now we're going to look to sell 1 share. Remember, I've got 4 books. Each one has 1 share. We're going to look to sell at $239.27, which is below my purchase price. So we're coming over here to Snowflake in our watch list, right click. We're looking to sell 1 share. I purchased a share at $240.93. So 10% of the 200s place is 20 cents. So we're going to add 20 cents to 240.93, which makes it $241.13. $241.13 is my sell order. Good till cancel and confirm and send. And we've got another ETF to look at, which is SPXL ETF. This is a triple leverage ETF indexing to the S&P 500. I currently have 6 shares, and with SPXL, I have 3 shares per book. So I've got 2 books, and 1 book is sitting here already in a sell order. We had several days ago fast moving average crossed below the slow moving average. So this is an indicator to look to sell everything at a profit once we have this cross, especially when we have the continuation candle. On the continuation candle, when price moves below the slow moving average, I don't necessarily need or look to have price fall below the lowest point prior to this particular day's cross or this particular day's point of sale. I just look to sell everything I have if I'm able to sell at a profit or place a sell order. In this particular case, I will be placing a sell order for 1 book, which is 3 shares. So we're looking to sell 1, 2, 3 shares. I bought those shares at $216.53. So 10% of the 200's place, that's going to be 20 cents. Adding 20 to the 216.53 makes it 216.73. So $216.73. Good till cancel extended hours. Confirm and send. So now both books are sitting in sell orders, and we're ready to move on to Dell. D-E-L-L, another computer company. All right, so Dell, yesterday, we had price move down below our fast moving average. We clearly have a continuation of that move. With Dell, I'm maxed out with my 8 shares. It's 2 shares per book. So I'm looking to sell 1 book because this is the trigger. That's just an indicator to sell 1 book. So we're going to pump this up to 2, and we're looking to sell at 144.84. Bum, 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 bum. Ba-dum, bum, ba-dum, bum, bum. All right, we'll try this at 148.82. And the 148.82, that is, I made an $8 profit per share. So that's $16 profit on those 2 shares that I just sold of Dell. Our next one is Zscaler. Zscaler, similar to Palo Alto, is another cloud security firm. I can't really go into great detail about a lot of the companies I own because I'm not that smart. I'm just your regular average guy out here trading and making a little bit of money. I am not an expert by any stretch of the imagination. So please take note that anything that I say or anything that I'm showing you, it is not financial advice. At any rate, Zscaler, yesterday we had price drop and close below our slow moving average. We do have a continuation candle, even though it's a green candle. Price is currently lower than the close of yesterday's candle. I currently have 3 shares, so that's 1 share per book. And my purchase price, I purchased one at $3.17 and another one at $2.81. So I will be able to sell 1 share at a profit. Hopefully it goes at $299.12. It is not going. So we're going to look at $299.10. Dun, 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 not going again. We'll try one more time at $299.08. And now we'll just hit sell market and see what it goes. We just tried to sell it at $299.08. Oop, that one did not cancel. Glad I didn't sell both of them. So we'll round that to $299, and I bought one. We'll round to $281. So that's another $18 of gains on that one. So that makes, so far, we're looking at $76 in profit today for the swing trading strategy. Archer Aviation is our next one. This is an eVTOL company. ACHR is the ticker for Archer Aviation. We had yesterday price move down below our fast moving average. We clearly have a continuation candle, and my Archer, I bought that at $11.85. Price is currently lower than my purchase price. So we're looking to place a sell order. Now from here on out, to save time on the video, I will not be recording any more sell orders. I don't want to make the video any longer than I have to, and if I am showing anything, I'd like to show you what the candles are doing and what my decision is on why I'm making those trades. Now, again, I will not be placing any more sell orders on video. Now I'm going to take a look at Archer's competitor, which is Joby, another eVTOL company. eVTOL is electric vertical takeoff and landing aircraft. Okay, where am I? All right, so Joby took a big hit yesterday. So price moved down below our fast moving average and our slow moving average yesterday. But my strategy, when we have a candle cross both averages, I only look to sell 1 book on this particular cross if there's a continuation candle, and that is the case. Now tomorrow, if we have a continuation candle and price is lower than this candle, not this one, as long as price is lower than our crossing candle of the slow moving average, then we'll look to sell another book tomorrow. And not only that, we actually have a fast moving average crossing right now below our slow moving average. So if we do have a continuation candle, that'll be a confirmation of this cross. So I will look to place a sell order on all remaining shares. But for today, we're looking to do that on 1 book. I currently have 3 books, and each book has 11 shares. So we're looking to place a sell order on 11 shares, which I do off camera. We had roughly 13 stocks. I had to take a look at it today because price has been moving down the past couple days. So much more opportunity to sell than, if you've been watching my videos, than the previous weeks. Another one we're going to look at is Riot. Riot is a video game manufacturer, and here we've got the same thing happening. We have one candle moving beyond the fast-moving average and the slow-moving average, both occurring yesterday. However, we have price gap down significantly lower than the close of yesterday's candle, but price has climbed its way back up, and we're now higher than yesterday's close. So this is not a true continuing candle, proving direction, stumbling, sorry. So we will wait until tomorrow to see what price action does tomorrow to make a determination on whether we will be selling any shares of stock due to these crosses. All right, we're going to take a look at another ETF, which is XTL. And that is an ETF within the telecommunications sector. This one's pretty straightforward. We had a cross yesterday, fast moving average was crossed, and we had to count a close, and today we have a clear continuation of that move. So I'm maxed out with my 4 books, each having 2 shares. So I'm looking to sell 2 shares at the current price of $146.94. It is not going, so we'll drop that down to $146.90. That is not going either, so we'll sell market. So that was at $147.07, so actually almost 20 cents higher. So that's a good thing. Now the shares that I just sold, I purchased at $126.61. We'll round that up to $127. So that's a $20 per share profit, making it $40 of a realized gain. All right, we're taking a look at another ETF, which is IWM, which is for the iShares Russell 2000. And we have price closed way down. We went down from 251 to 245. That's a big candle for the IWM. Not many of those. Let's see, there's one here. So that's the only other large down candle. So that's a big negative move yesterday. And we clearly have a continuation of this closing below our fast moving average. So we're going to look to sell 1 book. IWM, I max out with 4 books, each having 1 share. So we're looking to sell 1 share at the current price of $242.93. And I bought 3 shares for $231.37. So we're looking at roughly $10 of profit on that 1 share. Cardinal Health is the next one I want to take a look at, CAH. And, well, whatever we had, we got a beautiful big green candle. That's huge. I don't do a very good Trump, but anyway, it's a big, beautiful green candle. And because it's such a big, beautiful green candle, we will not be doing anything with that today. We'll take a look at it. Well, actually, if it closes up here, we won't even be looking at it tomorrow. So moving on to SoFi, which is an online bank, SOFI. What we're looking at, we had, we have the fast moving average, which I've not actually been selling. I've not been following through with my rules. And the reason is because I thought that we would be having some upward momentum, given that probably in a week and a half, the interest rates are more than likely going to be cut, which benefits banking, although we seem to be consolidating here since October 7th, just moving sideways a little bit, on the downside. I was sort of waiting to make the decision to sell when price dropped lower than this, price of $25.25. And I believe I'm going to stick with this because the current price is at $26.77. This bottom of the closing candle at the lowest point recently is 25.24, and I'm looking at shares that I bought at $14. So if it does drop, the likelihood that it's going to drop $10 from there within the next week and a half is probably pretty low. You never know. You can't predict the markets, and if you do, you're probably going to be wrong. I currently already have one book. I usually max out with SoFi at 72, so that would be 18 shares per book. So the only other book I have, like I said, I purchased at $14. So I probably will just stick with that theory and hope for all of next week. I believe the meeting is October, let's see, when is the next Fed meeting? Okay, that is October 29th. So if we keep moving sideways or go up, go down, I don't care. As long as we don't drop below this number of 25.32, maybe we can make it all the way to October 29th until the interest rates are most likely again going to be cut, and then we hopefully will be on an upward trend from there. But if price does move down, then I'll just go ahead and sell, and we'll be out one additional book of SoFi. I do have stocks that price has changed direction, I believe. One of them is going to be Hilton. We have the fast-moving average crossed back above the slow-moving average, and any time that I have... Man, sorry, I keep stumbling. Anytime when I have stocks sitting in sell orders and we have price move back above, I want to cancel all but one of the sell orders, because this typically is a good sign. However, it's probably not that strong of a good sign here. We're still in a slow downward trend on the slow moving average. Fast moving average crossed and then turned right back around and went, is in a downtrend on that as well. But at any rate, whenever the fast moving average, for my strategy, I want to cancel all but one of the sell orders, and that one sell order becomes my sell order for possible day trading if price moves rapidly and takes that out. So I take out the highest sell orders, one at 278.70 and the other one at 277.71. Now, typically, when we have this cross, I would want to max out, but I did not purchase. I'm not going to purchase back in because, one, we had the cross on this particular candle. It was after the close of this candle, so I count this as this day, and we did not have a continuation up. As you can clearly see, we went down yesterday. However, we do have a green candle today. So another reason I don't want to buy in is this is in a downtrend, and we have both indicators of the MACD below the midline of the histogram. And another stock where I believe the fast-moving average crossed above the slow-moving average is an ETF, XLP, and that is an ETF for consumer staples. And there we have the fast-moving average crossing back above the slow-moving average. And for XLP, I am currently maxed out with my 12 shares, and my 12 shares, and each book of 4 has 3 shares each. So I'm going to cancel 3. So actually, we're going to cancel both of these sell orders, and I'll come back in and I will place another sell order for 82.57. But that will just be for 3 shares. We do not have any earnings for this afternoon. That stocks rarely go to earnings on Friday afternoon, nor do we have any on Monday morning or Monday afternoon. Our next earnings that we have to consider is Tuesday morning. So we'll take a look at those and make our decisions on what we're going to be buying and selling in reference to our earnings statements on Monday. So for now, we are completely done with all of our sell alerts. So now it's time for me to take a look at my buy alerts. I received a buy alert for Ross Stores. So that would be ROST. All right, so the buy alert that we might have received is more than likely on the monthly chart and not on the daily chart. And there we have it. We just had the fast-moving average cross back above the slow-moving average today. And that is what the buy alert is on. However, I'm not going to make any purchases on this particular candle. It takes a month for this candle to complete. And if Ross Stores continues to go up Then we wait until November to make sure we confirm. That would be a confirming candle that we're able to buy back in fully into Ross stores. So we max out at 4 books, but I might consider doubling Ross stores. This is a good opportunity to buy back in. If you want to, my strategy, if I want to add to my sizes significantly, like double my shares, then I typically try to do it when price moves back above the slow moving average on the monthly chart, not on the daily, the monthly chart. So we'll look at that next month, but for right now, there is no buy alert. So I'll cross that off my list, so I won't keep looking at that. But at least we know that Ross stores might be something to look at in a couple weeks. So I'm going to head back over to my daily chart, and we're going to take a look at Celestica, which is CLS. CLS I looked at the other day, yesterday as a matter of fact, because we recently had the fast moving average cross back above the slow moving average on the daily. But if we expand this out, we actually were on a nice little run here for a 3-month run. And more importantly, let me go back to my monthly chart. This is a massive up run. So I'm a little concerned that if I buy in now, because we're so extended away from the fast moving average, that I might not see that much of a benefit. Again, I don't really, I put so little money into some of these stocks. However, Celestica is not one. When I max out, I'd like to have 20 shares, so that would be 5 shares per book. Now, I currently only have 3 because when I bought into Celestica at that particular time, that's all I had money for. It's all I could afford. I certainly do not have enough money right now to max out my books. I'm only sitting at roughly 2,300. Okay, I misspoke. I'm looking at the wrong sticky note. Celestica is, I max out with 12 shares with 3 shares per book. Sorry about that. But there's absolutely nothing that says that Celestica just can't keep going up. So I have to consider in the next several seconds what I'm going to do. We'll go back to our daily chart. We clearly are in an uptrend. Not exactly sure everything that Celestica does. So I'm going to do a little bit of research here. All right, we'll enter what does Celestica do. Read more. Electronics Manufacturing Services is a Canadian multinational company, Canada. That might not be good given everything that's happening with tariffs right now. Specializing in electronics manufacturing, providing a range of services including design, manufacturing, supply chain management, and aftermarket services to original equipment manufacturers, OEMs. So that doesn't really tell me much as a regular guy that's no genius by any stretch of the imagination. I mean, it's pretty, all I know is that they provide electronics manufacturing services, advanced technology solutions. I think I'll just stay with the one book at this point. If price continues to move up, maybe I'll buy back in. But given the everything happening with the tariffs right now and the sort of mild tariff war with Canada that we're having, that may have a negative impact. Again, I am no expert. Everything that I say should not be taken as financial advice. I clearly do not know enough about most of the stocks that I own. I basically am a momentum trader. I don't really care about the companies any more than that they are in the S&P 500. And if they're not in the S&P 500, then they are good quality mid, large, and small cap companies that more than likely may end up in the S&P 500. But that's as much as I know. And because I am a momentum trader and I am just a regular guy out here making money every day, just doing what I can in the stock market, I do not know enough. So do not take anything I say as financial advice. So with that said, I believe I will hold off on buying any Celestica, and I'll move on over to Cisco, CSCO. All right, so they recently, several weeks ago, had crossed the fast-moving average, crossed back above the slow-moving average. However, it's been up and down, up and down. And I also, when it was time to buy in, I just didn't have enough money. So if I, like back here if I don't have enough money on the day that after it crosses, we have a confirming candle, then I'll keep it on the list and look at the next day. And if we don't have enough money, I'll look at the next day. And then if that candle is down, just as in this case, and I do have enough money, I will not buy back in until we have a green candle again. So it's possible that I just didn't have any money to spare to purchase Cisco to buy in fully. Again, when I have a cross of the fast moving average back above the slow moving average, I like to max out. And with Cisco systems, I max out at 12. Now, I currently am waiting to buy back in on my day trading strategy, so I will buy one share or one book of 3 shares of Cisco. And that will give me one more book, just a shy of being completely full. But when I buy back in, when price turns around on my 2-minute chart, I'll buy back in, and then I will be maxed out with my 12. Now that takes care of the 2 buy alerts that I received today, but I do have some from previous days and previous weeks. So go ahead and take a look at those. One of those is NRG. So NRG, and you can see again, we recently had a price of the fast moving average cross above the slow moving average. And at that point in time, I like to buy in just completely the opposite. When we have a cross of the fast moving average below the slow moving average, I like to sell everything at that point if I can for a profit. And if I can't, then I place sell orders on any shares that I'm unable to sell at a profit. So I will be looking to max out. So for NRG, I currently have 9 shares, which is 3 shares for each book, totaling 3 books. So I'm going to purchase 3 more shares to max out my books for NRG. So I'm looking at 169.77. And then I'll put that data up on my sticky note wall. So now I cancel this sell order because this is sitting at over $172, and I will place another sell order for the book that I just bought, and that book becomes my day trading stock, or my day trading book for this particular stock. So looking at my day trading chart, now that I've canceled that sell order, price is moving up, so I will not be placing a sell order. I just keep looking. I look at my charts every 2 minutes, and I basically, as I said earlier, I basically do the same thing on my 2-minute chart that I do on the swing trading chart. So price is moving up, and if that starts to turn over, I will hopefully be able to sell some NRG at a profit. Next one to take a look at is Celsius Holdings, which is CELH. Now Celsius, I max out with 5 shares per book, and I max out at 20 shares total. But with the outlook of the S&P 500, what I have here is we're quite a distance away from the cross, but the outlook is good for the S&P 500 over the remainder of the year. We might have a little volatility for the rest of October, but typically November and December are great months, historically speaking, for the year for the S&P 500. So I am going to max out. I'm going to take a look at my day trading chart. All right, so this is the only book that I actually have. So I am going to max out and buy 3 more books. So that's 15 shares. Bump this up to 15, and we should be able to get it. 10 shares is roughly $640. So yes, I'll be able to get it. Should be no problem. 15 shares of Celsius Holdings. Again, I'm a pretty good distance away. This has been a pretty decent run, but I'm going to take the chance just because I want to fulfill the rules of my strategy. So I'm going to do the same thing with this. I'm going to cancel this sell order for this day trading book. This price was actually higher than the current price, which is why it's sitting here. But now as I look at Celestica Holdings or Celsius Holdings, just like for Celestica, the day trading chart is moving up. So I'm going to cancel that. And when it turns around, hopefully I'll be able to sell some one of these books at a profit. So I have roughly $600 remaining. The other balance, the other $400 basically, is left for stocks that I need to be able to buy back in on my day trading strategy. So we're looking for $600 to be able to spend. My strategy, one of the rules is I like to be fully invested. And one reason I don't mind being fully invested is you can't predict the market. I mean, you can predict the market, but you're going to be wrong most of the time. A perfect example is look at how many experts, if you're familiar with the markets, then you know that for the last 3 years, experts have been calling for a recession. They've been calling for a major downturn in the markets. And I'm 3 years in. I started 3 years ago. So it has been a common refrain the entire time of experts. We're talking about big names. I mean, all this year, Warren Buffett has been holding and selling most of his cash instead of buying in because he believes there's going to be a downturn. Michael Burry has been advertised and pat on the back and has been very vocal about the impending downturn. Huge hedge funds have missed this entire run because they were planning on a downturn. So I try not to listen to the experts. I try not to listen to too much news. I will take news into consideration, but I just basically apply the rules. And as long as I'm fully invested, because I buy good stocks, and if the market turns down, whether it's a day, a week, months, even a year, they'll most likely turn back around, and I'll eventually make a profit on those. And that's what I'm trying to show you through these videos, is just a simple investing strategy. All right, another stock to take a look at is Rocket Lab, RKLB. So Rocket Lab, well, that's starting to turn around. So we're not going to buy into that. The next one I want to take a look at, and this is from leftover from over a week ago. We're going to take a look at Johnson & Johnson. Now, they've been on a nice run here recently. See? I've been day trading them, making money on Johnson & Johnson. Right now, I have 3 shares, and when I'm maxed out, I have 4. So, you know what? Even though it's a significant distance away, and it's mainly a defensive stock, but right now, during the volatility, we still might be able to make a little bit extra money on Johnson & Johnson. So I'm going to buy 1 additional share at the 193. And currently, Johnson & Johnson already has a sell order. I accidentally have 2 sell orders. Shouldn't have 2. 193.27 and 193.10. So we're going to cancel both of those. And Johnson & Johnson currently is in a downtrend. So I will put a sell order for 10 cents higher than the price I just purchased that book for. And there's the new sell order set for 10 cents higher. So again, I do the same thing on my day trading strategy that I do on my swing trading strategy. I don't do anything different. It's just a different time frame. So the Johnson & Johnson is 192. I'll round that up to 2. So I'm looking at roughly $400 more to spend. So now I'm going back almost 2 weeks. This might be a bit too far, but we'll take a look at a few of them. So one of them is Northrop Grumman. That's already too high in price. It's already at $600. We don't have that. So we'll look at TPL. TPL is Texas Pacific Land Corporation. Again, not much of an expert on all of these companies that I own. I know they have something to do with land management and making revenues through oil and gas and water. They've got their hands on quite a few things out there. In Texas. Again, another example, I'm not an expert. But it doesn't matter. I can't afford that stock either. Next one is EQT. EQT. Don't know what this company does. All I know is as a trader, I'm a momentum trader. And like I said, it's been a couple weeks since the cross. So this is way back in the chart. So I think I'm done going back. I think I could just cancel all these others off the chart and disregard that because it's just going back too far. So this crosses all the way back to September 25th, which means the others are going to be around that time as well. So with that leaves us a little bit of money left for tomorrow. If there's a good day tomorrow and we have some stocks to possibly purchase. But I have finished all of my sells. I have finished all of my purchases for the day. If you are watching my videos, go ahead and maybe take into consideration, definitely do some research on your own if you're thinking about making the trades that I made today, especially on the sales side. If you possibly have some of the stocks that I chose to put sell orders on or sell, go ahead and take a look at that, do your own research, and maybe you might want to copy my trades. So with that, let's go back and take a look at our SPX index to the S&P 500. Still moving up. Look at that. It's even a more bigger and more beautiful or big green candle. Be nice if Donald Trump tweeted something nice saying, hey, you know, the tariffs aren't going to be so bad. That'd be a nice ending to the week. You never know. So we just started the power hour. You know, it's 10 minutes after 3 Eastern Standard Time. So who knows? This thing might take off, and we might. So it's 6,671, and you know, maybe we'll go up another $20 or $30. That'd be great. It is the power hour. All right, taking a look at our chart of the day is American Express. American Express had their earnings early this morning, and they estimated that their earnings would be around $3.97 per share, but they were actually at $4.14 actual. That was a bit of a surprise, and from close on Thursday afternoon, which is at $323, it had risen by $8 prior to the opening this morning, and then from there it went from $332 to $347. So another $15 rise. So American Express is our best performing stock of the day. Now, I did some day trading on it. However, when there are any stocks and they're just typically going up, I don't do well day trading. I would have been better off just not trading it at all. So I did have one share that did take the whole ride up, but as you can see, if you were to break this down, I bought at 338.20, sold at 338.50, bought at 338.08, sold at 343. So that was my biggest gain, was a $5 gain. And this is where day trading comes in when stocks are choppy. We sold at 343.63, but I bought back in at 343.03. And this I sold at 343.25. But the rest of these, they're small gains. I missed the majority of the run. And days like this happens sometimes. It's not, less than half of the times I day trade, my day trading on a stock that just pretty much is just going up for the entire day. Most of the stocks I day trade, they go up, they go down, they go up, they go down. So I catch it on each turn. That's usually where I make my money on the day trading side. But this video is geared towards the swing trading. So let's get back to that. So we'll go back to our S&P 500 chart, 1 day, 3 month and 1 day chart. You'll see there's American Express and how it performed today. It clearly is the largest candle in the last 3 months. So now we'll take a look at everything that I did today. So I sold Robinhood, Dell, Zscaler, the ETF XTL, and the ETF IWM. I put sell orders on Hewlett Packard, Snowflake, the ETF SPXL, Archer, and Joby. I canceled sell orders on Hilton and the ETF XLP. And I bought Cisco, NRG, Celsius Holdings, and Johnson & Johnson. I provide this list so you might be able to add this to your decision-making matrix, and after doing some research, decide whether you would like to copy some of the trades I've made, especially on the purchasing side if you're new to my videos. But definitely, if you have any of these stocks or any of these down here, you may want to do some research and consider that might be a good time to possibly sell yourself or be prepared to sell. These are not recommendations by any stretch of the imagination. Now we'll go down and look at not only my realized gains, but the portfolio performance for up to date, but we're also going to look at the realized gains for the entire week. And I show these numbers because proof is in the pudding. Okay, today was a slow day, just the S&P 500 just creeping all the way up, taking its time. I made $122.81 in registered realized gains, but I actually made more than that. If you're watching my videos for the first time, what looks like it's total losses, this is how Charles Schwab accounts for these the my trades that I make. The accounting purposes that Charles Schwab uses that I selected is last in, first out, meaning if the last shares I purchased for any equity was, say, $100 and price was actually at $96 when I chose to sell, it would automatically choose the last stocks that I purchased for $100, and I would show roughly a $4 loss per share. However, for my accounting, I choose the highest priced stocks that I purchased, but lower than the purchase price at that point in time of the sale. So I'm selling shares at a profit. So anytime that my account shows by Charles Schwab's accounting any losses, I've actually made a little bit more money than what actually is showing, but I always count just what I'm showing on the gains. I know I made more than $122, but for accounting purposes, I only count the what's showing in realized gains. Now this is for today. For the week, I made $1,494.84, and you can see I traded 453, made 453 trades over the week, where today was a little slow. I only did 83 trades today. In all actuality, this whole week was kind of slow. And the same thing is true here for the realized gains and the realized losses. I don't have realized losses. If you go back through all of my videos, you'll see that I sell shares of stock at a profit. Although I guess now I think about it, you wouldn't know that I'm selling stocks at a profit because you don't see my accounting from all the shares that I purchased and which ones I'm actually choosing to sell at that point in time. But you will be able to go see in the earlier videos that I have plenty of stocks sitting there with sell orders. And those are the stocks that Charles Schwab and their accounting says are already sold because they were last in, first out. Again, I sell stocks that are the highest priced stocks that I have, but lower than the selling price at that point in time. All right, my portfolio performance in this account since I opened it on August 20th is 6.98% compared to the S&P 500 at 3.61%. And the old account, which all of the assets in this account were transferred over to the new account, I was performing at 16.26% compared to the S&P 500 at 10.54%. And when we combine the two totals, I am performing 23.24%. That's year to date, compared to the S&P 500 at 14.15%, which means I am performing 9.09% better than the S&P 500. And I show you these numbers if you're new to my videos because I want to gain your trust. I want you to see that I am profitable. Otherwise, why would you listen to me? I hope that you watch my videos and you make it to the end of the videos and you see all of this. I'm just trying to show you how I trade. I'm trying to show you my strategy so that you might enter the stock market or you might become a more profitable trader. I am certainly more trustworthy than any of those people that you might find online that are just hawking their subscriptions for you to buy. They show you nothing. They show no live trades, where I am showing you live trades. Well, at least they're recorded live. Those other people, they show you charts and say, hey, I bought here and I sold here, and this is the strategy that I used. Buy low, sell high. And then they draw some stuff on a chart and they look really pretty and they're selling you some stuff. And they've got their screen flashing pretty quickly. They're going from one image to another. If you're serious about trading, then you're not actually worried about entertainment value. I'm not providing a great deal of entertainment value. I'm trying to provide intellectual information. I'm trying to provide true educational information. I'm actually providing real stock trading information that you can utilize either the day you see the video or within maybe even a week or two after the video was produced and put onto YouTube. Because the trades I'm looking for are long-term swing trades. Like, for example, American Express, it crossed on August 19th. It crossed up, was in a trend, moving up, and then it crossed over on October 7th. So we're looking at roughly a month and a half? So if you were a week late, even a week and a half late, you could still possibly buy in and get the majority of the run. That's what's important. Like if you missed this particular video where I bought in or transferred shares and then bought in over here, and you know I transferred shares because there's no purchase amount with these two shares that I transferred from the old account. And then I bought two more shares the following day because of this cross. But even if you bought in several days later, many other traders, they wouldn't buy in here. They'd wait until there was a consolidation, which is what this is. This is a zone of consolidation, and then it broke out, and they would tell you to buy here. But you'd be at a loss. You'd be down. We'd be waiting for another cross. At any rate, if you made it to the end of the video, please like, share, subscribe. I would love to reach more people. I would love to help more people, and I can't do that without your help. So thank you very much. I hope you have an awesome, amazing Friday, if you're actually watching this today, and enjoy the amazing weekend that you're about to have.